So let us now go to the next part, considering other special audit areas. So in this section, we will discuss the audit considerations relating to an entity using a service organization, auditing accounting estimates, including fair value accounting estimates and related disclosures, related parties, so using the work of internal auditors, and using the work of an expert. So let's go to the first one. We have audit consideration when an entity uses a service organization. So now let us talk about service organization. So a service organization, just like this one in our example, is a third-party organization that provides services to a user entity so that are part of that entity's information system relevant to its financial reporting. So actually here, our client is the user entity ABC company, and we are called the user auditor. So we are from the perspective, or we are on the shoes of XYZ CPAs, so who audits ABC company. Now, ABC company, portion of its operations or functions are outsourced to another company. So like for example, business process outsourcing company providing payroll services to the user entity. So in that case, that BPO that provides payroll function to the user entity is called the service organization. Now, as far as we are concerned as auditor, so since we are auditing the financial statements of ABC company, the user entity, so we are concerned about the impact or the effect of the services being provided by the service organization in the course of our audit of the financial statements of the user entity. So our objective as the auditor is to understand how this outsourced service would affect the risk of material misstatements in the financial statements of ABC company. So in that case, we need to understand the nature of the services being provided by this service organization to our client, so the significance of those services, and the effect on the relevant controls. So for example, in this case, it's the payroll process which is affected by the service that is being provided by the service organization. So we have to understand what are the risks of material misstatements that may arise from the services being provided by the service organization, and what will be our appropriate responses to the assessed risk of material misstatement. Okay, now in the course of our understanding the impact of the service organization to the controls and ultimately in the financial statements of the client, so we can refer to the report being provided by the service auditor. So the service auditor is the one that audits the internal control of the payroll services Inc. in this example. So who is the service organization? So this service auditor will normally issue either a type 1 or type 2 report, which we can use in our own evaluation of the design and effectiveness of the controls being employed by the service organization. So because in the process, it will also affect the controls that are being implemented by that service organization in rendering its service to our client, which is the user entity. So we have type 1 or type 2 report. So depending on the significance of the service, depending on our planned reliance on the controls that is being influenced by the service organization, so we have to consider the sufficient and appropriate evidence that we need to obtain, and whether we can rely on the report being provided by the service auditor. So what are these two types of reports being issued by the service auditor? The auditor of the service organization. So remember, we are the auditor of the client, the user entity, and the service organization has also an auditor that audits its internal control, which affect our audit of the client's financial statements. So we have the type 1 report. So the type 1 report is a report that includes the description and the design of internal controls of the service organization. And the type 2 report contains description, design, and operating effectiveness of internal controls of the service organization. So in this case, the type 2 report would be more comprehensive compared to the type 1 report. So that is why if, let's say, for example, we plan to rely on the internal controls of the service organization, then most likely we need to rely on the type 2 report to be issued by the service auditor. Okay? But if we plan to perform, for example, substantive test, more extensive substantive test, so with respect to the output or process where the service organization is involved, so the type 1 report might be enough already. So since we will not be relying much on the internal controls of the service organization. So to summarize the procedures involved in auditing a client that uses a service organization, we have to understand the services relevant to the audit provided by that service organization. So we have to understand the relevant controls that are in place and being influenced by the existence of the service organization, and determine our reliance on either the type 1 or type 2 report. So in the course of our understanding of the service organization or the impact of the service organization, so some of the procedures that we can perform would be to obtain these reports if available. So type 1 or type 2 report from the service auditor. We can also contact or communicate with the service organization. So through the user entity with their consent, of course, to obtain specific information. So we can also visit the service organization, for example, the business process outsourcing company, and perform procedures that will provide necessary information about the relevant controls at the service organization. We can also use another auditor to perform the necessary procedures or to provide the necessary information about the relevant controls at the service organizations, like, for example, the service auditor that we discussed earlier. And as our response, depending on the information that we obtain, so we will determine whether we can obtain sufficient and appropriate audit evidence in the course of our audit, so we can perform test of controls and make inquiries about significant risk. Now, if we plan to rely on the internal control of the client or including the controls being provided by the service organization, so then we have to consider whether the type 2 report is available. So because that is the one that provides information about the operating effectiveness of the internal control. So if we plan to reduce the amount of our work, then we have to uh, have a basis of the operating effectiveness of the internal control, including the controls being managed by the service organization. So that is the time where the type 2 report will be relevant. Because remember, the type 2 report includes the operating effectiveness of the controls of the service organization. So, but let's say we plan to perform more extensive substantive tests, we will not rely on the control, then probably a type 1 report would be enough already. So as part of our evidence of the understanding of the controls where there is a service organization. Now, at the end of the day, when we conclude, issue our report, we will not make any reference to the work of the service auditor. So whether we plan to rely or not rely on the work of the service auditor, to the work of the service organization rather, so we will not refer to the work of the service organization. So except of course, if our report is modified. So because we will explain that in our basis of opinion or basis for opinion. Now, if we will not be able to obtain sufficient and appropriate evidence, then we have to determine the impact in our audit report. So like, for example, if material or significant, then modification would be necessary. So those are some of the things that we have to consider when our client uses a service organization. Next, another issue is auditing accounting estimates. So in making accounting estimates, that's the responsibility of the management. So the management is responsible for making reasonable accounting estimates. And our objective as auditor is to obtain sufficient and appropriate evidence. So whether the accounting estimates, including fair value accounting estimates in the financial statements, are properly recognized, fairly stated, so and are reasonable no, under the circumstances. So like for example, it pertains to fair value, then we can compare it with the published uh, quotation prices available from the market. The information published by regulatory agencies like, for example, PSE, so BSP, PDST. So those are some sources of information where we can compare the information about fair value used by the entity. And we also need to determine so whether the related disclosures in the financial statements are adequate or enough. So in the context of the applicable financial reporting framework. So for example, if the client presented investments at fair value, so the relevant disclosure requirements under, let's say, PFRS 9, so we have to consider whether all of those required disclosures are made by the client. Now, the reason why it is difficult to obtain evidence about accounting estimates is that because accounting estimates involve high degree of judgment and subjectivity on the part of our client. So that is why when they make accounting estimate, like for example, allowances, so allowance for impairment of receivables, of investments, of PPE, of fixed asset, of intangible assets like goodwill. So then there's a high degree of subjectivity involved. So that is why our focus are as auditor would be to determine the significance of the accounting estimate. So the sensitivity of the accounting estimate to variation, like for example, the estimate involved the use of interest rate. Then when those interest rate changes, what would be the impact on the amount of, let's say, income or gain or loss that would be recognized in the financial statements of our client. So we can also compare with the deviation from the historical pattern. So we can look at the trend of that accounting estimate compared to prior years. So we have to also evaluate the degree of subjectivity and susceptibility to bias. So all to determine whether the amount recognized or disclosed by the client are reasonable. So what are the procedures that we have to perform in auditing accounting estimate? So we have to understand the process of the client in making the estimates. So we have to review and test that process of the management. So we can also develop our own expectation. So based on our experience, based on our knowledge from similar companies, and compare it with the management's estimate. Okay, and one of the best evidence with respect to those estimates would be the outcome of a subsequent event. Now, like for example, the client made an estimate about the outcome of litigation. So they recognize a liability, okay, or a receivable. So from that, let's say, litigation. So when subsequent event occurred, meaning that litigation was settled subsequently, so then we can compare the amount at which it was settled on the amount recognized by the client as liability, for example. So those are some of the procedures that we can perform in relation to audit of accounting estimates. Next, we have consideration of related party transactions and disclosures. So again, it's the management who are responsible for identifying and ensuring that they have sufficiently disclosed and reflected related party transactions in their financial statements. So as auditor, our responsibility is to obtain evidence about the sufficiency and appropriateness of related party disclosures because these disclosures are required by our standards and sometimes depending on the jurisdiction, the regulatory agencies. So like in the Philippines, the SEC and the BIR. So in the course of our evaluation, we inquire from the management the identity of their related parties, so including any changes from prior period. So we also ask of the nature of relationship between the entity and those related parties. So like for example, parent subsidiary relationship, joint venture, uh, significant influence, so even key management personnel. So those are also included in the definition of related parties. And whether the entity entered into transactions now with those related parties. So during the period and the type and purposes of those transactions. So because those transactions are needed to be disclosed also. So in the financial statements of the client, especially if there are material transactions among the related parties. Then finally, we have to also be alert when we inspect the records and documents of our client for any arrangements or other information that might indicate existence of a related party relationship or transaction. So in the course pa rin of our evaluation whether the disclosures are adequate with respect to related party transactions. Okay? So usually, this one, yung nabanggit natin earlier. So the matters that we inquire from the client. And as I was saying, so to determine whether appropriately disclosed, so all required information about the related parties, including related party transaction, so we can perform procedures to determine whether there are other related party transactions or relationship that are not yet adequately disclosed. So these are usually the indicators of a related party relationship. So borrowing or lending at no interest rates or at rates that are significantly different from the market rates. So sale of real estate prices at significantly different from appraised values. So exchanges of similar property and non-monetary transactions. So loans with no scheduled repayment terms. So businesses with major customers or suppliers. So services being provided or received at unreasonable prices. So accounting records for large or unusual transactions without proper business rationale. So confirmations and invoices from lawyers. So some of the procedures that we can perform related to RPT transactions and disclosures include reading the minutes of meetings of board of directors and even shareholders. So examining large and unusual transactions. And we can also inspect filings of our client with Securities and Exchange Commission, SEC. So statements of conflict of interest normally being filed with the SEC also. So pension and identify the officers of the client. So because remember, so key management personnel, including their family members, are also considered related parties. Next part, we discuss the use of the work of internal audit. So because remember, this part of our audit pertain to evaluation of internal controls. So an internal audit department of an entity works closely with internal control of an entity. So usually listed companies are the ones who are required to set up an internal audit department. But of course, even non-listed company, if they want to, could also use internal audit. So as part of their organization. Now, as far as audit is concerned, so we have to consider whether the work of internal audit can supplement the work that we will perform. So with respect to our study and evaluation of the internal controls of our client. So the considerations that we take note in using the work of internal audit are summarized in this figure. So first, so we consider whether the work of internal auditor would be relevant to the audit. So because for example, if you will not be relying on the internal control of the client, you plan to perform a substantive test. So rather than rely on controls of the client, then it means that the work of internal auditor would not be relevant and you will not be using at all the work of internal audit. But let's say you plan to rely now heavily on the controls of the client, then that is a time that the work of internal auditor might be relevant to the audit. However, if the work of the internal auditor is relevant to the audit, it doesn't necessarily mean that you will use them immediately, okay? Or you will use them already. So there will also be additional consideration with respect to the adequacy of their work, their objectivity, competence, due professional care, and communication. So in determining whether the work of internal auditors would be adequate for the purposes of the audit, so we will evaluate whether number one, as mentioned, objectivity. So we will consider their line of reporting. So meaning to say, are they reporting directly to the board of directors or to audit committee? So because if not, if they do not have access directly to the audit committee or to the board of directors, so there will be question as to the objectivity of the internal auditor. So because remember in our previous discussion that the objectivity of internal auditor is maximized if they have direct access with the board, particularly with the audit committee. So with respect to competence, so we have to consider the education of the internal auditors, their experience, their professional certification, okay, in determining whether they are technically capable of doing their work. So due professional care. So we will check whether the work of internal auditors are carried out with due professional care by reviewing their documents such as planning, uh, documentation of their work, working papers. So that's the evidence that they are applying due professional care with respect to their work. Okay, and whether they are willing to communicate or cooperate with the external auditors, us. So that is the communication. So those are the considerations that we will take note in determining whether the work of internal audit is adequate. So if we are satisfied with the adequacy of the work of internal audit, then we will have to consider the planned effect of the internal audit work to the nature, time, and extent of our procedures. And then we evaluate the adequacy of the internal audit work, like for example, in performance of test of controls, if we consider their work. And then finally, we use the work of the internal audit and document our conclusions reached. Like for example, if we rely on the control, we use part of their work to determine the operating effectiveness of the control. So we document that in our working papers. However, at the end of the day, we will assume the full responsibility on the opinion that we will express. So we will not reference that we use the work of internal auditor when we prepare our audit report. So the full responsibility with respect to audit and use of the work of the internal auditor will still rest with the external auditor. So again, no reference on the work of internal audit whatsoever. So sir, what if we did not decide to use the work of internal audit? So no problem. And then it will be the external auditor who will perform all the work. And similarly, no expression or no reference on the opinion that we will express on the financial statements of our client. So next, let's talk about using the work of an expert. So an expert, also known as a specialist, we know from our previous discussion, so is a person or organization possessing expertise in a field other than accounting or auditing. And their work is used by us, auditor, as part of our obtaining or gathering of sufficient and appropriate audit evidence. And the category of these experts or specialists may be either auditor's expert. So if the expert is hired by the auditor or is working for the auditor. Let's say, for example, the expert is part of the auditing firm. Or a management expert. So meaning to say, the expert or specialist is hired or working or employee of the organization that we are auditing. So the difference between the two would have something to do with their independence. Of course, it will be more objective if the expert will be hired or working for the auditor compared to the management's expert. Okay. However, we have to consider those degree of independence. So depending on our reliance on the evidence that we need. So that is why in using the work of an expert, so we have to consider the following items. So for example, the knowledge and the experience of the auditor in the matter involved. So if it is a specialized industry or specialized matter or field, then we have to consider whether we need an expert to help us obtain sufficient and appropriate audit evidence. We also have to consider the risk of a material misstatement, so based on the nature and complexity of the matter involved. So even if, for example, the field is other than auditing and accounting, so but it's easily understandable, then we have to consider whether there is a need to use the work of an expert or no longer needed. So we also have to consider the materiality of the item involved. So for example, the item is not material, even if it is needed to have the knowledge of someone from another field or expertise. So we might not need to use an expert anymore for that particular area. And finally, we also have to consider the quantity and the quality of other audit evidence available. So because if there are other audit evidence available, so we might not need to consult an expert anymore if that other audit evidence already provide support on the matter that we are auditing. Now, like for example, so let's say an area or a possible area where we might need an expert would be appraisal of the value of the asset. But let's say there's sufficient market data available for that asset. So we might not need an appraiser anymore. So there's a quality evidence available aside from the valuation by that appraiser who is an example of an expert. So these are some of the considerations that we have to consider or to take note whenever we will use the work of an expert. So here in this table, we have some example of common specialized areas that an auditor encounter in typical audit. So there might be some other area. This is not exhaustive, but these are the most common examples. So like for example, we encounter in our audit valuation of certain types of assets like real estate, so plant and machinery, biological assets, so work of arts, precious stones or materials. So usually the expert involved here would be appraisers. Then we have determination of quantities and the physical condition of asset, like for example, mineral reserves in mines, all oil, petroleum reserves. So capacity of facility of machinery or equipment. Usually the expert involved here would be engineers. So determination of amounts using specialized techniques or methods. So we have actuarial valuation of post-employment employee benefit. Usually the expert involved here would be a mathematician. So more commonly known as actuaries. So the actuaries, they are the one who determine the valuation of post-employment benefits. So measurement of work, example, percentage of completion. So similar to the second the example earlier, so usually the involved expert here would be engineer. And we have legal opinions for interpretation of rules, contracts, and regulations. So usually the expert involved here would be a lawyer or legal professional. So here is the summary of the work, the procedures that we perform in consideration of the using of the work of an expert. So during the risk assessment phase, the planning phase of the audit, so we determine if there is a need for work of an auditor's expert, like the consideration that we we have discussed earlier in the previous slides. So we consider the required procedure and we consider the competence, capability, and objectivity of the expert. Now, like for example, whether the expert is hired by the auditor or by the client. Then we understand also the expert's field of expertise. So by considering his or her professional certifications, experience, line of work, and we agree the terms of the engagement with the expert. So during risk response phase, so we evaluate the adequacy of the work of the expert, including findings, conclusions, assumptions used, and sources of data. So not because we use an expert, we will be totally detached already from the procedure performed by the expert. So we still have to check whether the expert used the correct sources of data in building his or her work or in working on his or her conclusion. So we check whether his or her findings are aligned with our expected somehow. So findings based on our own understanding. And finally, we determine if any further audit procedure work will still be required. So particularly if the work of an auditor's expert lacks adequacy for our purposes. So we have to discuss it with the client if we feel that we are not satisfied with the work of the expert. So because it will affect the our judgment, no, whether we have obtained sufficient and appropriate evidence for our audit. And finally, during conclusion and reporting, so similar to the using the work of internal audit, we will not refer on the work of the expert so unless our report is modified. So because we have to refer to it in our basis for opinion. And then if we cannot obtain sufficient and appropriate audit evidence, then we will also be needing not to modify our audit report. So depending on the pervasiveness or materiality of the matter. So usually the choice there is either qualified or disclaimer of opinion.